ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. So,
hello, Bruce.
I did it. I'm not very technical, but I did it.
Good job.
For all of our listeners and watchers out there, Tom has passed the baton to me to be the production manager on this. I don't know if he did the right thing or not, but we're going to do the best we can. This show is not about technical talent. This show is about giving you information on what's happening in the market, where the opportunities are and where the challenges are. So let's talk about that, Tom. So what are you seeing out there?
I am seeing what I like to call a schizophrenic market. It is, you've got to pay attention. I don't want to say you have to be careful, but you have to pay attention. I've got, just anecdotally, I've got a couple listings last month that I put up in the Tuscaloosa area, and one sold in a weekend, one took a week, and both under contract at full price, right? Everything's going smooth, no problems. I've got two in almost the same time period that I've taken in Sanford, Florida, which is only about 5 or 6 miles away. Similar price points, a little bit lower. But those have been sitting on the market for one for 3 weeks and one for a week. And it's not so much that they haven't sold in that short period of time, but we're not getting the activity levels.
Location, right? Location, my friend.
Yep.
You got Tuscaloosa is highly desirable. And some pockets of Sanford are great and some are just not as good.
Yeah, absolutely. And it's the price point in Tuscaloosa is just above where that median person is going to be buying. Right. And so I think the people that are a little bit above the median are more, they can absorb a little higher interest rate. They can absorb a little bit higher price. Whereas the folks in Sanford, for the most part, are going to be a little more cost conscious and price conscious and payment conscious.
I agree. Well, I think a lot of it has to do with the market, this schizophrenia syndrome that we're in right now, because let's just take a quick look at the charts here.
Yeah.
All right. Let's see here. So, bonds are up right now. That's fairly flat, but they're up. But look at the stock market's up over here as well.
Yeah, stock market's up a little bit, although it's down over the last couple of weeks a lot, right?
Well, of course it is, but I mean, I think we're up for a correction in the market. I think that even your dog thinks we're up for a correction in the market.
My dogs are very excited about the correction in the market.
Well, I think that it's inevitable. Let's take a look at the bonds here. So on the bond chart, you can see I put these moving averages in here. You've got your 200-day, your 100-day, your 50-day, and your 25-day moving averages. We're still sitting above them, but boy, are we testing them. And that was all that's happened in the last 10 days previous to today. So you can see we've slid down, but not a lot of movement. Right. But it was a little unsettling. We were hoping to continue to go up, but we're hitting against this right here. There's our ceiling. And once we pierce that and stay above that, I think we're smooth sailing for some better interest rates. Well, but with the economy rolling forward, and we've got all these news events that are happening that are of high importance, like retail sales. So you've got a lot of important issues coming up, and it's going to be very interesting to see exactly what happens moving forward.
We're up
for a correction in the market. I think the stock market's going to correct, and I think the real estate market's going to correct. I think we're actually in a correction right now.
Usually you don't recognize the correction until you're in it or even through it, right? You're like, oh, wow, look what just happened. Most recessions are thought of or seen 6 months into them, right?
Well, it's so strange because on one house, it's sitting on the market and the seller's paying $15,000 towards closing costs to sell it. Then on one 5 blocks over, or 5 minutes away, has got 5 offers on it on the day it hits the market.
Correct. Yeah, it's, it is definitely definitely a little interesting. Let's say that. So I say to people that are looking to buy, interest rates are back down to reasonable rates, right? They're basically in the 40-year norm.
You can get south of 7 all day long.
Yeah, they're basically inside the 40-year norm, right?
Yep.
And we're probably never going to see 3 or 4% again. And
Nope.
if you're looking for a house, and you're going to stay in it,
now's an opportunity.
I don't know if I would be investing. Like if I was looking to get investment property, which I do, I buy investment property. But today, for me to buy a property, I need to get a heck of a deal. I'm not buying a property just because I have the cash and I'm ready to buy.
It's interesting you're saying that, because I'm seeing a large portion of my new clientele, they're investors. They're DSCRs and bank statement programs. And I look at it and I'm like, your cash flow is not really that positive, if it's positive at all. Why are you doing it now? They think that after these rates settle, they're going to get their profits. And it's very unusual. It's an erotic market, but I'm seeing plenty of investors jumping in the market right now.
I am, maybe it's my mindset. I'm a little more about the cash flow itself, or if I can get a deal and, for a flip, right? And that's obviously a distressed asset that I'm going to be purchasing. But
well, so for anybody out there listening or watching right now, Tom and I are investors, but we help investors as well. If you're looking to sell a home, Tom can help you list it. If you need somebody to buy that home on a quick sale, we're always open to entertaining those opportunities. But we'll give you the right advice, whether it's to sell and put it on the market, or whether it's to take that quick sale. You have options. Don't let somebody talk you into doing something that's not in your best interest. Talk to Tom and I will guide you in the right direction.
Bruce, I'm going to tell you about one of the big things that I've got going on this the last month, and for the next probably 3 or 4 months. I've got an investor client that approached me wanting to buy a piece of commercial property. The piece of commercial property is about $1 million, and she owns currently 6 actual single-family rentals, mostly free and clear, and she would be facing a pretty hefty capital gains tax if she sold them all to buy this piece of commercial property. So we decided to look at a 1031 exchange. Problem being, she doesn't have a lot of cash to fix them up. They need a little bit of renovation, each one of them. So we're doing something super interesting. We're doing a reverse 1031 exchange. Okay.
How about that?
For those people that don't know, a 1031 exchange is where you sell a property or properties and buy a property or properties within a very short time frame. You have 45 days to identify the properties and 180 days to close. And you can do that without paying any of the capital gains tax, because you're essentially exchanging properties, right?
Correct.
We're doing it in reverse. She's going to buy the new property first, then sell this other properties on the back end. She still has the same 180-day period. There's a slick little thing that you do with your qualified intermediary that's needed to do this. But it's all perfectly legal and above board. And so the interesting thing is we're taking over seller financing that the current seller already has in place. We are initiating a seller held second. So the seller is actually going to hold back some money or hold back a mortgage for a short period of time for this transition. Bringing some cash to the table that we're getting by refinancing the 5 properties ahead of time, all with private money, right? Closing in like a week or 2 on each one of them.
That's a lot of moving parts.
It has taken up a lot of my time, but I've learned a lot, and I've seen a lot that I didn't think of before, and I'm watching a lot of cool things happen. So we close at the end of March, and then we have 6 months to sell the 5 properties that she's going to sell. And we're prepping them for sale, and we're not prepping them for sale as investor properties. We're prepping them for sale as owner-occupant properties, because that's where we can get the most bang for our buck. We can actually put an extra 10 or 15K into the property and get an extra 20 or 30K out of the property.
Well, I'll tell you, it takes somebody creative like you to put all that together. That is a mastermind puzzle. So congratulations on that one.
I will
If
let
you
you know
want,
how it all
if
goes
you're
when it's
shopping
done.
for a really creative realtor, there you go, right there.
Yeah, it's definitely fun, and a little stressful. And we're coming down to the wire because I'm helping her raise all the money as well. So it's been a ride, but I'm gonna document it all, and we'll do a video on it.
Fantastic. Hey, listen, that keeps everybody up to speed. Interest rates are still down. They're below the 40-year average. Buyers are in control, but in some communities, not so much.
That's
So
right.
if we're giving you mixed information, it's because that's what the market's doing. It's very neurotic right now, but
It
that's
absolutely
what you
is.
get. You're going to get the truth, always the truth, and nothing but the truth when it comes to Tom and I. You guys have a great week. Tom, thanks for joining on the Monday morning market meeting. Appreciate you.
All right, Bruce. You have a great one.
See ya.